Hey everybody. Good morning. Another day in paradise. Hopefully nobody's too wrecked on Bitcoin. Um, you know, it's going for that 92,000 test. Don't know what to say. There we go. Put the monster up here where everybody can see it. And what's that? Delicious grapefruit kind. And welcome channel members Andrew, Don, Rob, Gayton, Hugh, Serge, Arturo, Diane, Craig, K. General Rush, good to see you, sir. Miss John, Veterans Day. Thanks for all you did. Mary, Aki, Jeff, Sledge, Ted, David, David, B, Mad, Pauline, Darren, Frank, Ivan, Dan, Rongamer, Mary. Good to see everybody and all my regular subscribers like Ted, Jason, Jim. Thank you for being here. Mark, Wreck-It Ralph, Larry. Thanks. Couldn't do this without y'all. The show has definitely been light lately, and I don't know what's like. It's just light in this industry. I don't know what's going on. I don't know if it's people are stressed, people just head in the sand instead of getting information and staying aware of what's happening. I'm concerned. It's not like I'm complaining about the viewers. I'm actually like concerned that people aren't paying attention to what's about to happen or what is happening. It's it concerns me because I'm here. I do this just to help y'all, help everybody, and I tend to be right. I mean, look at Bitcoin. Didn't want to be right on that one, but sometimes we get lucky. Sometimes. Anyway, before we get to the charts and stuff, I want to welcome everybody back to the show. I was at a pawn shop the other day. Don't ask. Don't ask. I mean, it got me thinking though. Pawn shop's a pretty simple concept, right? You bring in something valuable, say a vintage guitar, the shop gives you cash, you agree to buy it back later for a little more if, it's a short-term loan thing. And, the guitar was collateral. Now, what if I told you there's a pawn shop for billionaires? Giant banks, the titans of finance. Except instead of vintage guitars, they get to pawn hundreds of billions of dollars of US government bonds. And they're not just doing it over a week or a month. They do it overnight, every single day. That is the repo market. All right, when the mainstream media talks about the repo market and being frozen up and all this stuff, that's what the repo market is. They take their US government bond collateral to the pawn shop. Well, basically for overnight. Isn't that crazy? Welcome, my friends, to that repo market. This is the financial system's plumbing. And right now, that plumbing not flowing so good. Got some weird noises. Some seriously concerning things going on. Just a few weeks ago, the Federal Reserve, our friendly neighborhood financial plumbers, at least they think they are, told us that everything's fine. We've been on this kick called quantitative tightening, QT. Think about it as them sucking money out of the system with a big shop vac. They were trying to get back to normal after years of printing money like it's going out of style. I mean, their curve went exponential. But as we started to approach normal, things started to get a little bit grumpy in those pipes. Started to make a little funny noises and groans and whistles and hums. And the repo market, it's a massive $1 trillion a day pawn shop, and it's starting to freeze up, lock up, jam up. The interest rates for those overnight loans have been spiking. The big banks have been getting thirsty for cash, and nobody's willing to lend it. So the Fed, in a bit of a panic, announced that They were going to end QT 2 months earlier than they planned. And that date they put on it just recently during the FOMC was December 1st. They turned the taps back on just a little bit and breathed a sigh of relief. Like everybody jawboning that was enough for a few days, at least a couple weeks. See? Problem solved. Nothing to see here, except the problem isn't solved. The pipes, that problem, the jawboning only worked for a couple weeks, and now the rates are spiking up again overnight. The market is basically saying, nice try, but that little trick, jawboning, isn't going to cut it. The cash is frozen up. And this is where the story potentially gets a little bit interesting here. This is not what you're going to hear in the mainstream media, right? I mean, the Fed is now whispering about something called reserve management purchases. Sounds very official. Kind of boring. But let's translate that into investor speak instead of Fed speak. In simple terms, we're going to print money again. That's what that means. They're not calling it QE. That would be admitting that they lost control, and the maniac that is in control, Jerome Powell, thinks he's done the perfect job. This is QE light. I can't believe it's not QE. Maybe can't believe it's not butter. Can't believe it's not QE. It's a diet, caffeine-free, gluten-free version of money printing, but still money printing. And here's the kicker. They're not doing it because the economy is weak. They're doing it because the financial system is so addicted to money, and easy money at that, we just can't function. The market has been forcing the Fed's hand. It's like a junkie telling the doctor, hey, I got to get my fix or things are going to get ugly around here. Now, for investors like us, this is where the alarm bells should be ringing, right? Not with panic, but with opportunity. You see, you wonder what's going on in the market, and you're like, oh, it's sell the news for the reopening, blah, blah, blah. This is what's really happening. Like the market's freezing up in the background. They're having to sell assets to create liquidity in the system. All right? Makes more sense when you look at it through this lens. When the plumber tells you he's about to open the floodgates, though, you don't stand in front of the valve and wait to get wet. You figure out where the water's going to flow. And who better to ask than the financial gurus themselves, right? Ray Dalio, the billionaire founder of the world's largest hedge fund, just came out with a stark warning. He said the Fed isn't easing into a recession this time. They're stimulating into a bubble. Think about it. The last time the Fed did this, the economy was on its knees. Stocks were in the toilet. Now, we're near all-time highs. The economy's been growing. Unemployment still pretty low, even though we've got the highest layoffs in like 20 years in October. Stocks are at all-time highs. We're pouring gasoline on a fire here, not trying to start one in the rain. So where does all this leave us? Dalio says this is a classic late-stage debt cycle, and this is the environment we're in. He's looking at two things right now, gold and Bitcoin. Bitcoin taking a bath today, though, right down to that 92. But that might be what propels it to the all-time highs. We needed a flush out. We got to get the weak hands out. Why? Because when Fed prints money, it debases the dollar. It's simple. Supply and demand. Why gold and Bitcoin would go up and other things denominated in dollars. Commodities were actually starting to break out higher, kind of across the board. So dollars get worthless. Investors flock to assets that can't be printed out of thin air. It's no coincidence that central banks around the world are buying gold at record rates. They see the writing on the wall. And what about Bitcoin? Well, it's a new kid on the block. There's volatility for sure. But if you get in at smart prices, the fact it has a fixed supply of 21 million coins, that can be very, very attractive. But that's not all. The Fed has basically told us they're going to buy Treasury bills, short-term government debt. They're expected to hoover up, shot back up about 75 to 100 billion a month. You don't have to be a genius to figure out that what's that going to do to the price of those bills. It's kind of like the Fed is playing poker and showing everybody their hand. And let's not forget the banks. Who do you think benefits when the Fed injects cash with a fire hose? The very banks that were getting thirsty in the first place, the ones with big repo desks. They're about to get gifted a lot of money from the Fed as this opens back up. So here's the bottom line. The Fed's plumbing, it's kind of shot. Like they've kind of hit the max on QT. They should have basically stopped this train before we started having fits in the market. They tried a temporary patch, didn't hold. Now they're going to have to open the main valve, flood the system with cash while pretending it's just a technical adjustment. We're just trying to fine tune what we're doing. And it's likely to create a massive bubble in assets like stocks, gold, cryptos. It's probably going to be a fun ride. This might be the blow off top. As Ray Dalio warned, bubbles always pop. The key is to ride the wave, but not get crushed when it comes crashing back down. So keep your eyes on the repo market. It's a canary in the coal mine. And right now, it's kind of a weird tune. So keep coming back. Make sure you're subscribed. We'll keep you updated as this keeps unfolding. Thanks for being here today, everybody. It's a sell. So when you need liquidity in the system, everything sells. It's not a protection, right? PM. Why did GLD tank? When liquidity is tight, it sells everything. Everything sells in the beginning, and then you figure it out. That's the way it works every single time. There's no like, gold's going to go up because liquidity in the system's frozen up. This is like, what I was talking about was macro versus micro. Like macro over the quantitative easing time frame, gold and Bitcoin are going to outperform. They don't outperform during the initial flush out. Stocks don't outperform during the initial flush out. We're hitting a hiccup in the system right now where it's a liquidity problem. And that's basically what's going on. Why are we selling off? Why did we hit this big pullback? And I kind of warned you in the charts. Like I could see it coming for, 2 weeks? So be careful out there, everybody. All trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results, just because I predict things and sometimes they come true. Sometimes I get lucky. This presentation intended to be an informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instruments, including stocks, bonds, stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. Welcome to the Morning Monster. I'm your hostess with the mostest. And let's dive in some charts, see how we make some money here. So we're sitting last day or last trading day, the first half of November. We've got a month and a half left basically in this year. 2025, down to a month and a half. We'll probably get a deluge of some economic data coming out, but not really expecting much to hit. We might get a jobs report surprise release in here somewhere. I'm not sure what the plan is. I'm not sure anybody knows what the plan is at this point. We kind of skipped CPI, PPI due to the shutdown, but we're now reopened, but we don't have a schedule on when we're going to put them out because we're not sure. And yesterday the White House press secretary saying that probably the whole statistical government data system permanently damaged because of shutting down and not publishing the reports. I mean, this is almost like they scripted this stuff, right? It's almost like it was planned that we're going to F the whole system. We started in July when we fired the BLS head, and we shut it down, don't produce numbers for a month and a half. Everything's effed. It's almost like they're planning to reset the system a little bit, maybe. I don't know. I'm not talking about like the great financial reset thing that other YouTubers and fearmongers talk about, but it's almost like they're trying to reset kind of the data. I think they should just release it all to it. Just give us the freaking data and let us do it ourselves. I mean, just give us the raw data. But that's dangerous. Telling the truth is dangerous. Got to make everything look okay. Can't keep the crazies in if you tell them the truth. Obedience, right? Anyway, let's take a look. Bitcoin. Well, well, well. Just a little bit more to go. Just a little bit more to go. I really want to see it down just a little bit more. A little bit more. That would be a great place to bounce right in there. Pretty darn close. Pretty darn close. I did close my IBIT options. I put that spread back on I was talking about. What's that? 56.52, I think or 58.52, something like that. I think if we hold 92 on Bitcoin, we should hold 52 on IBIT. If you're brave and bold enough, you can sell some puts down here while we're down here. It's probably not going to be a bad decision, at least in the short term. Now, long term, we could be heading into crypto winter. I'm not going to sugarcoat that. I've had so many people tell me that that's not happening this time. Like, I don't understand what I'm talking about. There's no crypto winter this time. That I'm pretty convinced that we're probably going to do some sort of crypto winter. Now, for me, I want to see us hold this 92 and go back to new all-time highs, and then everybody's going to be convinced that there's no crypto winter, and that's when we'll do it, more than likely. Let's see if I can log into the platform, pull up the chart here, and I was trying to load a trading platform. For whatever reason, it closed. I guess I had it open too many days. There we go. IBIT. So if you roll in here with IBIT, even though we potentially have more downside, you could roll in here out a week. Look at these 52s paying 70 cents. That's really juicy. You could be actually down at 51 right now. Nice premium available right there. And these ones right here, the 52s, 5150s, or 51s, all very nice. You're like, well, I want to play a little longer. Look at that. You could be down here. You could be right there at 50 with $1.60 for 35 days. Pretty nice. That means you make 160 bucks for every $5,000 you put up on that. It's not bad. So, as always, be careful out there doing that kind of stuff. I don't usually show this platform off, but let's take a look at something real quick. Let me pull this over. For those that have PowerX, it's a Rockwell thing. IBIT. Down in here, let's type it in. IBIT. Grab some. Let's see. December 19th was what we were talking about. Let's grab the data. Pull it up. Take a look. And you'd be down at 51 and get 37% ROI. At 52, it pays 43% ROI. And so still the same prices, even though you'd go out like December 19th. Now, the disadvantage here is if the dip keeps dipping, you'd be stuck with that 52. But you get paid pretty good for it. Your cost basis would be down below 50. If you got put the stock at 52. Long term, not a bad shake, but you got to make your decision. So, pretty handy dandy tool right here. So, I'm looking at this holding in here. Maybe like, well, what about playing some sort of leverage, something like BitX? Yeah, be careful doing that right now. Be careful doing that right now. Now, it's possible that we just bottomed out, but I'm not so sure. I think we're going to get a little bounce here this morning. I told a few people that the way we closed yesterday, or the way price action was behaving into the close yesterday, I was like, that's not a sign that we're done on the downside. We're probably going on down. Now, there's a little thing, like 95% of the time, we don't make a bottom on a Friday. At least on S&P 500. But you look at this, and we're not really the lowest low on a Friday right now. And this was the lowest low on a Friday, and it stuck so far. Monday, Tuesday, we were up here. If this one makes a lower low, we may continue this party on down. Just depends on what shapes up today. Move some of that stuff. Let's see. This right here, if that's an A, B, the C would be right down here. That would be the A bottom, the B retrace. This would be the C bottom right in here. If we go down, and ES, let's take a look. This looks like classic price action. If we hold this high or low, this is almost too perfect right here. This right here was a perfect retrace for this to be a diagonal. I thought we might only do a 100-point retrace. Turns out we did a little bigger. We went a little higher than I thought we would, and then we did a little deeper than I thought we would. 200 points down. So if we can hold here, turn back higher, we can run up all the way back up here. If we break below that low, coming on down here, more than likely. Remember, it's liquidity. There's liquidity problems in the system. No matter what anybody says, the system is short on liquidity. When it's short on liquidity, we have to sell the things that can get us fast liquidity. It's all those things right there. All the things I watch. Oil getting a little pop. Let's check it out. It's almost like a flight to oil. That's lower highs. It's still a downtrend. Watch out for the next leg lower. And gold, I warned yesterday that this might take a bath. First move down, retrace, held the 618. I was really nervous about that weekly gold rush trade, and guess what? We're going to eat it probably. Short term, this is probably coming back down. As we go into QE, this will probably shoot off to new all-time highs. Can't confuse the short-term price action with the long-term macro behavior. It's just like this is probably going to shoot on down the supports. It's not far now. Gold's got a long way to go compared to Gold is frothy. Bitcoin's not so frothy. Bitcoin's almost a support. Gold's been frothy. Hopefully that helps everybody understand. Let's see. SI. Wow. Man, that's... So this also has the potential to crush right there. It rejected the head and shoulders. Yeah, be careful on that one too. Been looking for that retrace for a while on silver. It's going, I think it needs a retrace so it can propel itself higher. Yep, I saw Verizon 15K layoffs. But we need them, like, so when it's like, get a layoff, wait a week, hear another one, wait 2 weeks, hear another one. That's not a sign we're going to flush right now. It's when you get like Verizon's this, today, Oracle's tomorrow, IBM's the next day, Kimberly-Clark's the next day, couple in the next day. When you get them like back to back to back or wait a day or two in between, that's when things are about to get really bad. So, and if you want to listen to or read somebody that does really good breaking down what the fudge is going on with the job market, Amanda Goodall on X, she's like the job chick. She gets hired to be a consultant for a lot of Fortune 500 companies to tell them what's going on with the jobs and the hiring and the firing, and the companies don't even know what's going on in their own company. And she breaks it down, and then she posts about what she found, at least from a high level perspective. It's pretty interesting to read. So if you want to know more about that specifically, I don't call it double top or anything like that. I don't believe in those kind of patterns. So I did a crap lot of back testing across thousands of instruments with hundreds of candle patterns. There were only 2 that showed statistical significance, and that statistical significance was just slightly higher than 50-50. Most candle patterns and chart patterns are complete bullshit. Imagine that. Complete bullshit. Now, my price patterns have a statistical significance. I've put tens of thousands of trades to them, if not hundreds of thousands at this point. So if we break below this low, which we're about to do, probably coming down here, right down here. Now, yesterday, I wasn't so sure I was going to do the beer money trade. We got a little reprieve on the drop that I saw started at 130. It was about 230 before I jumped in. Looked a little dangerous, but ended up just kind of going flat. Now, what I was watching was way down here in this price action. Thursday, where's Thursday? It's right here. I was like, that's not the price action yesterday. Here it is, right here. So we bottomed out. And I got involved right about here. But I put myself down below. Down here. I was able to get paid. The market was pricing in we were going to drop out to a lower low. It was pricing that in like all day yesterday. It was pricing in that we were going to drop below this low yesterday. But we didn't do it. There was some buying coming in. And at 2:30, I was like, if I could be down here, I feel pretty confident that we're not going to take a big step down into the close. it was far enough down with only basically an hour and a half left in the market. Now you do it at 1:30, that's 2.5 hours. You got to be careful. I wasn't feeling confident that this was going to stop, but after an hour of kind of bounce, I was like, we probably don't have the energy to drop on down right now. So that's why I jumped on it. Now, this is starting to get stretched to the downside. We're hitting the third standard deviation, so we're going to have to, this thing's going to have to chill. Now, it can run out. You know, look back over here. We can stay 3 standard deviations out for a little while. But then it chills out. And then we get some more downside. Right now, we're kind of running this red line. And we were out for a little bit here. And now we had to chill out. Now we're back down. So if we run it down further, farther, faster, more aggressively, so I have to chill out again. It's just the way price action works. There's only so much energy. Even on the sell side, there's only so much energy before it's got to chill the freak out. It takes energy to move stocks up and down. You see S&P is already getting a nice little juice there. NQ getting a nice little juice. Russell. NKD continuing to sell a little bit. This one probably needs a little bit more downside. We may have to flush this down here to go higher again, if we can go higher again. That ramp up on the new prime minister going to inject tons of liquidity in the system. Looks like it's maybe run its course a little bit. Dollar still sitting on the roadmap line. Just on the underside right here today. If we get below 98.5, we're probably coming on down to lower low. If we can stay in this vicinity, break back above this high we made just a few days ago, probably running on up to 102. And we get above 102, and that's a short squeeze kickoff right there, because short the dollar was a macro theme coming into this year. Actually, for most of the year, short the dollar for big money players. Short the dollar was a big play. There's tons of shorts on the dollar. Above 102, that starts getting wrecked really quickly. And right now, they're thinking this is just a consolidation before we punch on down, and it's quite possible. We get below 98.5, we're probably going to punch on down. Apple. Flight to Apple. This shows you this. Apple is looked at as stability when there's chaos in tech. For whatever reason. It keeps being true. And Goose pointed this out a long time ago. There's usually a flight to Apple when the rest of tech's being kind of chaotic. You know, Amazon coming on down, probably going to, I'll be surprised if it doesn't go for the roadmap line at this point, but it could find support just above it right here. Google. Hey, Svenborn, haven't seen you in a couple days. Hey, Kimberly. Favorite subscriber. Google not really getting hammered too bad. Retesting this consolidation back here would be expected, but I still think we're going higher before we get a bigger downside to come retest this area. Still believe we're going up to 304 before we come on down further on Google. Meta is so freaking close. Come on, just a little more. Just give me just a little more. This might be a buying opportunity for Meta for And this, maybe it's starting to already show the strength that we're going to come up short of hitting the ideal spot. Meta could be a big opportunity right here. Not even joking a little bit. This could go up to like, this could be a double pretty easy. Maybe even more than a double for something that's this freaking big. That's a pretty big opportunity right there. Talking 12, 13, maybe even higher on Meta. Microsoft, I want to see this flush on down just a little bit more. Pre-market, it was looking good for, I was seeing like 493 on the pre-market. I want to see this push on down just a little bit more. I need to see it in this zone right down, below 490. 480 would be great. Could come down to 470, but, and here's the, don't try to knife catch, because if we start pushing on down through, could come down here like Meta, down in the low 400s. Been warning about that one. Nvidia looks like it wants to come on down to the roadmap line. Be careful on that one. Tesla, that might be the bottom. That might have been close enough right there. That was right in the target yesterday. Getting a little bit more dip today. Touched the 380, touched in the vicinity of 380, which is where Zach, for anybody that follows Zach Maines on X, he works for ElliottWaveTrader.net. He freaking loves Tesla. He thought we might see this 380 test. Pretty darn close. I thought we'd see maybe a test of that. That's what we got yesterday. We went a little lower this morning, and that may be all we needed on Tesla. So watch for this bottom to hold, and off to the races. That was a big three-wave correction. Went a little extreme on when we failed to break out right here. I warned that we were going to see some downside. That's why I put that target there. Went a little further down. That 1618 right at 383, which is right where we touched this morning. See that bottom of the candle right there on the 1618? Right there. That can be done. Finito, finished. Finito, bandito. This getting back out of here. Breaking back up through this stuff. It's going to be really bullish. So it doesn't have to hit the roadmap line. It could just be the 4-hour bounce right there. Go from the high down to low. Breaking back through 435. Sets us up for getting in the vicinity of 500. Right there. Don't get shaken out on these retraces. Netflix turning down as predicted. Watch out for the sell the news on the split on Monday. So I go pull gainers, which there weren't really many today. T-Mobile failed to launch. That was a three-wave retrace. There's the move down. Here's the retrace. And bingo, bango. That's probably the bottom. Check plus, baby. That sets it up for a rally from here. Got to see it break through 243 and fill that gap. Right there. Right there. Need to get through that gap. And then we got kind of a secondary resistance at that high. If we can break through both of those, probably coming on up here, 290, 300. Let's put this over here. Save. Leverage, leverage, leverage. Short bit. And be careful playing this one. If we get that bounce, it can be vicious. KLAC. Decliners. Let's look for anything that maybe. Oh, look at that. Darn close right there. That if you looking for an opportunity on AVAV, This might be it. I was expecting it to pop on up here. It's almost a double. Let's see, AMAT. Was that close enough? Not sure. May have more downside to go. Now, does not look like it's bullish. I would be careful. This can go lower low. Lily hit the target yesterday. Be careful here. We can go on up to 1100, but it's highly likely to pause or retrace the breakout at this point before we go higher. Now, there's a chance we just go on right on up there. But I'm off of this trade now. Like I'm done. Like I'm no longer getting involved in that. Light probably needs a retrace. Be careful. STX needs a retrace. Coinbase almost came down to the target. That's ABC off the top. For those that haven't paid attention, ABC was right there. Almost got there. Wanted to see it. MicroStrategy was getting wrecked. Well, hate to say I told you so. We might be at the bottom there. Could go just a little deeper. That was the target zone right there. Right in it. Man. Now this one could be done. And if that's the case, if this is actually the bottom and we are done selling Bitcoin, Bitcoin may go down over the weekend and tag 92. This could be done on MSTR. And we need to see it break back above 370 to set up this run higher. 631 to 720 up here. Lots of stuff bouncing already. Lots of stuff still way over the ski tips. Oklo almost back down to the roadmap line. TLTR come almost back down to the roadmap line. This one needs to touch so that we can go higher again. Let's see, Robinhood. Been warning about that one coming back to the roadmap line, possibly going a little deeper. Just got too high too fast. They need to take a chill pill. Reddit holding the roadmap line so far. If we don't hold on to it, watch out. Below, do a bigger, deeper retrace. That is potentially 5 up complete. Talked about this yesterday. If it is 5 up complete, watch out for retrace back down in this area. Let's clear it up and put it back on here. This is the potential. 1, 2, 3, 4, 5. It didn't overlap in here. Like that held above this. Usually the higher degree, wave 2, which is likely what this is. 0.1, 2, 3. Let's put them out there. Have to go, let's see, take that down a degree. So if this is the way it's going, that one, that two bottoms in the vicinity of 4. So somewhere in this area, Reddit will likely come down here sometime out next year probably. And then we'll be off to the races again, going higher. That looks really spicy. Big picture, if you can wait for the retrace. Don't get overly aggressive on it. The wave 3 goes all the way up here. Not predicting time, just predicting levels. Try to give you a little time-based prediction here. Looking at the climb speed. I put 3 out there like that. 2 could be bottoming sometime first quarter into second quarter next year. Then 3 would be up here 27, 28. It's a pretty nice opportunity if it plays out. I'm going to put in an alert right there. A-Lab. And David, hopefully you didn't get caught too bad in all this. A-Lab breaking through. I want to see this push on through that resistance. We may need another retrace to do that though. I'm not high confidence. This is too choppy, too overlapping. Not clear. I like clear charts. It's usually where I put the bigger bets on, make the bigger money. Caterpillar, watch out. Between Caterpillar and Deer, those are my current areas in the coal mine. This one's coughing up something, while Caterpillar is just rocketing higher. So usually those fly together and they're not. So that's a concern in my mind. Hello, Dave. Looking like we might pull back. In BIS, back to the roadmap line. UNH. I think this needs to get that 618 retrace before we can go higher. I drew it back here and a little higher. So that sets up the bigger bounce up in this area. 600 if we can get if we can hold this 280 support. TSM. So we may bring that back to the roadmap line. Be careful, being aggressive on some of these that have just been cranking higher. Amphenol, golly, that just popped up there and just rode this line. If we can hold on to it, great. I'm gonna say if we break below the low we've got from today, this is probably coming back to the roadmap line right there. VRT, it looks like we're retesting the breakouts, holding it pretty well so far. That can push us on up to 208, possibly 300. XLK might need to take a spin down to the roadmap line. So I'm very concerned here because so many tech things need a deeper retrace. Like Oracle needs to come on back and retest this breakout. Needs to come on back down. Just a little bit more. If you got sucked into it, sorry, but that was a definitive sell. Jack and I talked about it quite a bit. ARM failed to break out. This is a warning sign for a deeper retrace here. Clean it up. Make it real simple. That was a failure. It popped out, and when it failed to hold the retest, that sets it up for a steep drop here. It's 3 waves down, 3 waves up with a weak move, we may see this 1, 2. No, it's possible we hold on here. Like as long as we hold higher than this, it's possible we keep going. But if we do that and retest that area, set up this right here. Let's just draw a few things on here. That, and if we do a bounce in here, that'll be a head and shoulders. We set up this. Kind of set up that right there. If we bounce off of that. Idiom. Golly, it's been a monster. I'd watch for this to retrace the roadmap line though. Need that. That could be an opportunity if we're going to go higher on gold and silver, which it looks like we will at this point. PAL went through the target, came back down. Let's say PPLT. Yeah. If you don't have some of this, about a 20, 30 buck upside right there. I don't have any. That's an opportunity if you want to get a piece of that one. If you just got to have pieces of stuff like that. Anglo Gold, Ashanti, that's due for a retrace. Be careful. KTOS coming back for the roadmap line. D-Dog. Let's see. There were only 3 things set up with entries today. Long list. Whew. So here's my pattern right here. That high, that low. Entry 104, target FDL. There's the close above. 45 target. NJR. Not sure I like this very much. This one's kind of sloppy with a downtrend. I mean, it's possible that 3-wave down was it, but it actually picked up that right there. 48 target. Let's see. Did it? Let's see if the algorithm jumped into that one. No, the algorithm didn't. This, the TradingView algorithm, which is a little more picky than the Python one, did not like that one. Did not like that one. And got into that one. Now, look at the win rate on that one. That one's pretty darn good. That one will probably work out more than likely. 83% chance based on the historical trending of this. The thing I don't like, though, is this downtrend, and it requires breaking out, which we have not done yet to get up there. I don't like that. So this one may fail, but 83% chance it doesn't fail based on history. Past performance not necessarily indicative of future results. Let's see. Check in here. How are we doing? So far holding the low. Yeah. Party on. Let's go. That bottom this morning may be the low. As long as we hold this low from back here, that's it. That's the level to watch. Right there, that low. Got to watch it on futures, not on the cash. If you take this to this chart, you're making an error. All right. Complete information here, not here, and not on other tickers. Now, in Q, different path. We made a lower low. Different path, not the same. So this could react differently. This adds a little bit of question to what's about to happen. It's possible that 3-wave is done on this. And if so, that's a wave 1, that's a wave 2 potential, and we can go on up for wave 3. Puts us up here in the target zone. Possibly way outperforming. So that almost hit the daily roadmap line. Kind of back testing that support. If we break back through there, we're probably coming up to 2,600, if not 2,700 on Russell. That's what we're looking for. You know, short term today, looking for that bottom to hold. And if it doesn't hold, we've got more downside in store. If we do hold, we're probably going to be set for a rally, maybe through the end of the year. So that this right here kind of sets us up. Like, this is possibly the pullback I've been talking about, that the flush out that we needed to set us up for our center rally. I just don't know if today is done or if we're going to get continuation Monday, Tuesday, Wednesday next week. All right. Be careful out there, everybody. I'll be back on Market Masters in about an hour and 15 minutes. So if you want to come join me there. Otherwise, I guess I'll see you later. David Oliverio, if you're still here, I wrote that indicator myself. This right here is my tool. I made the code available to my Termite Trading Lab group. I'm not putting it out there for anybody else. There's more to it than just what I did. And it's not like, it's a custom Bollinger Band code that runs off my roadmap line. So it provides 3 standard deviations from my roadmap line, up and down. That's what it does. Yeah, you see it's a roadmap line Bollinger Band, standard deviation bands from the roadmap line, basically. It's not difficult to do if you know a little bit about statistics. But yeah, the roadmap line, click the channel homepage, you get the code for free, and then doing the standard deviations off of that's not hard if you know what you're doing. If that's not you, keep following me. Give me a like, give me a thumbs up, give me a subscribe. Click the bell with the notifications if you want to get all the notifications when I go live. And have a great day. See you again soon. I'll be back Monday. Same bat time, same bat channel, 9:15 in the morning. We'll hunt for opportunities. Nobody's watching out for your account more than you are. So be careful. Bye for now.